Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the Euro US dollar FX futures for Thursday, February 7th, 2013. Well, a continuation of the trend to the downside today, and this candle that has completed is a very large black body candle, very bearish candle. The black body denotes the sellers making a substantial amount of net bearish progress. It suggests that the sellers now have gained some very solid downside momentum, and the sellers were strong enough to take out the 135 level of previous strong support, where we saw the market find support for the previous day's trading, and that was a crucial area to this market as suggested in yesterday's video analysis. The market today has found support down around this 133.90, 134 level that I suggested would hold potentially a strong support. We saw the market probe down below there and some buying coming in. That also coincided with a test at the Kijun-sen. We know that the Kijun-sen is fairly strong support for a market, but also it was a previous area of resistance when the market was trading within this symmetrical triangle, so a good solid area that we should be watching for tomorrow's trading. The market earlier today did attempt to rally and rallied up towards this 136 level of resistance, and we found the buyers losing commitment up around that level. Took out the 135 level as well and closed down towards the low and just above the 133.90, 134 level of support, highlighting that the sellers have taken control of this market at the close of trading for today. So there is good potential for this market to trade lower. The only problem here is that we do have solid support at that 134 level and just below there at the Kijun-sen, and that has potential to strengthen this area around here, and there is potential for the market to bounce off there and perhaps test up to 135. Now, in terms of the Fibonacci Extension, we're examining the current first time frame downtrend and its relationship to the previous time the market was trending down, and here we've seen the market today travel through the 161.8% level. Previously that level held as solid support, coincided with that support level at 135, and now tested to the 261.8%, almost exactly to that level. So we do need to watch how the market develops here. No solid sign that we will see the market bounce off there. There is a possibility that the market could trade down through there, but this area coincides with the area that the Kijun-sen is trading at, so it makes it a very, very strong level of support. At the moment, as this candle is developing, we are seeing some buying coming in, so there is a potential for the market to test up to higher levels and find solid support down around here. But for the candle that's finally completed, sellers in control, sellers committed, so no sign of weakness in the sellers at the moment there. Now, with the Fibonacci Retracement, and here we're examining the relationship of the first time frame downtrend to the previous time the market was trending up in the first time frame, and today we've taken out the important 61.8% level and tested down to the 78.6% level. So a very important break of the important 61.8% in a very bearish manner. The 78.6 is one of the minor levels, although that doesn't mean that it will not hold. We have seen that minor rejection from there, but still sellers in control. No hint that we will see that level hold. If we do see continued bearishness in this market and testing down through the Kijun-sen, we could see the market testing down to the 100% level at 132.69. Now, in terms of Ichimoku, we're still a bullish market in the long-term time frame, so trading up above the cloud. I mentioned last week that the market was looking overextended. We were trading a long way away from the cloud. We tested within this yellow zone, and when the market has moved too far away from the Ichimoku indicators, it tends to bounce back like a rubber band, and that's what's happened with regard to the cloud, which represents equilibrium in the long-term time frame, so the market's mean reverting, moving back towards that equilibrium, but also in the medium-term time frame by reverting back towards the Kijun-sen. And the Kijun-sen here, as I've already mentioned, has potential to hold as very, very strong support for this market. Looking at the Tenkan-sen, obviously we're now trading down below there, so quite a change of character in this market for today's trading. If we look back at the recent past, we haven't seen the market trading down below there for some time. The last time was here around the start of the new year, and the market did find very solid support after it broke there down around the 130 level, so we could see that happen again, but there is potential for this market to trade lower because we have seen this very solid bearish breakout down below the Tenkan Sen. Crucial now will be the 134 level and the area around the Kijun Sen trading at around 133.60.